When you hear the word amortization, it's easy for your eyes to just glaze over, right? It sounds like some boring, complicated accounting term. But what if I told you that for a real estate investor, it's actually a secret wealth building machine? Today, we're going to pop the hood and see exactly how this machine quietly and automatically builds your fortune.
So let me ask you something. That monthly mortgage payment, do you just see it as another bill, another cost of doing business? Or could it be something more, like a powerful tool that's actively growing your net worth? I promise, by the end of this, you're going to see that payment in a completely new light.
Okay, first things first. Before we can really appreciate how this all works, we have to understand what's actually inside that one monthly payment. We've got to dissect it. So, at its simplest, amortization is just the fancy word for paying off a loan over time. You make the same payment month after month, year after year, and poof, eventually the loan is gone. Seems straightforward, but the real magic is in the details of how that payment is structured. Every single mortgage payment you make is split into two buckets. First, you've got interest. That's pretty simple. It's the fee you're paying the bank for the privilege of using their money. Then you have the principal. And this right here is the golden ticket. This is the part of the payment that actually pays down what you owe. And here's the crucial part, the big reveal. That split between interest and principal, it changes dramatically over the life of the loan. In the beginning, in those early years, your payment is almost all interest. It can feel like you're just spinning your wheels. But then, as you keep paying, the scales starts to tip. And by the end of the loan, almost every single dollar is going straight to principal, building your equity like crazy. All right, enough with the theory, right? Let's make this real. Let's walk through a concrete example with a $1 million property so you can see this wealth machine in action with actual numbers. So let's say you buy that $1 million property. You put 20% down, which means you're taking out a loan for $800,000. We'll stick with a standard 30-year mortgage for this. Now, if you get a 6% interest rate, your monthly payment for just the principal and interest is going to be right around $4,800. And remember, that number, that $4,800, it stays the exact same for all 30 years. Now, take a look at your very first payment. Of that $4,800 you send to the bank, a whopping $4,000 is just interest. That's just the bank's fee. Only about $800 is actually chipping away at your loan. It can feel a little demoralizing, I know. But let's fast forward a few years into the loan. Your payment is still that same $4,800. But look at this. The amount going to interest has dropped big time, and the part going to principal has more than doubled to $1,800. Now you're really starting to make progress, and you haven't paid a penny more. And that right there is the entire point. The amount of money leaving your bank account is the same every single month. But what that money does for you, how much wealth it builds, changes and gets more powerful over time. It's a slow burn, but it's incredibly effective. Okay, so now that we get the mechanics, let's talk about why this is an absolute secret weapon for you as an investor. This is where we shift from just understanding it to actually using it. This right here, this is the mindset shift you have to make. Stop thinking about it as just paying a loan. Start seeing it for what it truly is, a forced savings plan. It's like you're automatically putting money into a savings account every month. And the best part? For a rental property, it's a savings plan that your tenant pays for. Let's just break that down. Your tenant pays rent, that rent pays your mortgage. That mortgage payment reduces your principal balance. And as your principal goes down, your equity, the part of the property you actually own, goes up automatically. And get this, even if your property's cash flow is zero, even if it's just breaking even, you are still getting richer every single month thanks to this hidden wealth creation. Oh, and it gets even better. This isn't just about building net worth. Over time, as that loan balance drops, your options expand. It becomes easier to refinance into a better loan, maybe with a lower payment. And then, one day, the loan is just gone. A paid-off rental property means that entire rent check, minus some expenses, turns into pure, beautiful cash flow. But amortization, as powerful as it is, isn't working alone. The real mind-blowing wealth creation happens when you combine this forced savings plan with the other heavyweight champion of real estate investing. This is it. This is the formula. It's so simple, but it is so powerful. Your true wealth growth comes from two places: the principal your tenant is paying down for you,
plus the natural increase in the property's value over time or appreciation. When you get these two forces working together, your growth becomes exponential. So let's check back in on our $1 million property 10 years down the line. You started with your $200,000 down payment. Over that decade, your tenants have paid down about $150,000 of your mortgage for you. And let's be conservative and say the property has appreciated by just $200,000. Look at that. Your total equity is now $550,000. You've more than doubled your initial investment, and a huge chunk of that happened passively.
And this is why it's so important to shift your thinking. A lot of new investors, they get hyper-focused on one thing. How much cash flow did I get this month? And that's important, don't get me wrong. But the savvy investor asks a much bigger, much better question. What is my total wealth creation? They're looking at the whole picture, including that hidden growth that's happening every single month.
When it's all said and done, a truly great real estate investment is giving you a return from 3 different places. You've got your cash flow, which is your income today. You've got amortization, which is that automatic equity growth. And you've got appreciation, which is your big picture upside. The best deals fire on all 3 cylinders.
So I'll leave you with this question. Now that you know about this hidden wealth machine, the next time you're analyzing a deal, what are you going to focus on? Are you only going to look at the cash in your pocket at the end of the month? Or are you going to look deeper and calculate the total massive amount of wealth being created for you over the long haul?